Hey guys, this is Simon. I'm doing a live coaching session, and I'm going to post that both to the members room and to the public because I think something pretty important occurred today. We juggle a lot of balls when we take risk, right? We're trying to figure things out. Where's our best trade location? What are the markets trying to do? Interpret what our as a day trader, right? Interpret what our um, interpret what our ideas are in terms of where the market is going or where we think the market's going to go versus what the market's actually doing. And of course, the objective is never to worry about where I think the market's going, but always what the market's doing. But that means that I need to be able to read the tea leaves in real time, right? And so I want to cover a little bit today, particularly focus on ES and NQ, guys, because that's where it was the hardest, right? Really, the bonds were pretty self-explanatory today, and CL worked beautifully. And we learned the most from where we have difficulty, right? So let's kind of start off with the beginning of the day. And remember what we were looking at. As a matter of fact, I'm going to pause this for a second. And I thought I could do it, but I can't. I wanted to pull up the recording that I made today, but this system won't let me record over another piece of software, so I'm going to have to figure out how to get the recorder over the recorder. I'll figure that out later so that people can actually see the PA in real time. So let's stretch this out real quick so everyone can understand. I don't want to lose anyone's attention because it was important, right? Today, there's a couple things that I rely on. First of all, I rely on the integrity of the white zones. And this is really important. I want to continue to take my trades from the white zone each time, right? And whichever market I'm trading, right? And take the losses if they occur, because I know that the win rate is so very high out of those white zones that I don't want to panic. I don't want to overtrade when it occurs. I don't want to over leverage into the account. I just want to take those trades because I know I have the edge in the white zone. But then the conflict is, as you progress as a trader, there's a whole bunch of other trades that you might want to take, right? But in order for those trades to work for me, right, the markets kind of have to sync up. And I'm not talking about CL, and I'm not trying to make any connection to the bond market. I'm just talking about plain and simple the NASDAQ, right? So, and then you got to balance your own psychology and judgment, decision making in that process. And something that Mark Weinstein from the original Market Wizards, who made literally millions of dollars trading, he said there's only one or two things that lead to trading losses, and that's you're trading in an environment you're unfamiliar with, but you insist that you continue trading, right? Or your charting work itself is off, right? And so, in this market, in this coaching segment, what I want to cover is how did we figure out to go on pause this morning, because we did not get run over in this area, and then B, we didn't short when the market popped back up, which was important since it ran all the way back, right? And so I'll tell you, I had a pretty miserable day in ES. I had 0 trades in ES, and I only had 1 trade in NASDAQ 100, and it got stopped, right? Most of my money came from crude oil trades today. But that doesn't tell the full story, right? The full story is, and before I get started, I forgot, I got to throw this up. This basically says, this is for educational purposes only, and past performance is not indicative of future results. Don't trade with the money you can't afford to lose. And I am not soliciting you to buy any type of financial instrument, whether it's equities, futures, options, or currency trading. And of course, there's a lot of risk in day trading. That's what we're talking about. This is the most risky business that you can be in, or one of the most risky businesses. You really have to know what you're doing. So a number of things. First of all, when I have a white zone fail, whether it's NASDAQ or ES, it's rare, right? So when it happens, it puts me on pause. And I got stopped right out of the gate. But the other thing that struck us immediately, right? So if you stretch this out, look at the size of the rotation here off the open, right? The blue line is the opening print from the start. And notice NASDAQ by 15 minutes in is trading above and holding above its opening print right here, right? And ES is stuck below. So immediately that tells you, right, they're not in sync. They're not getting the same oomph. Now, that would be really unusual during the regular year, but we're now in the heart of summertime, and it's not that unusual, I guess you could say, for ES to not link up with NQ, but it is frustrating as a trader, right? So next, and this is important, is look at the size of the rip in the NASDAQ. We ripped from essentially 5680 all the way up to 5717, right? And then that's a let's see, 60, 17, let's just assume that's 20. That's almost a 50-point rip, $1,000 a contract right through here, right? The S&P has only moved 4 points, right? So the first thing I say is, well, that's weird, right? The S&P should be running if the NASDAQ's running that strong and something's off base. It turned out that the biotech index was really, really strong. So this is the coaching cue to take out of that, right? When the markets aren't matched up and you are the type of trader that relies on a read, you need those two things to sync up. If you don't need them to sync up, great. Our key target on ES for a short today was very simple. The key target for a short was right here at 24.27. The key target for a long was our next yellow zone below, and the next yellow zone below was 24.10 1/4. Now I'll tell you why I did not take the 24.10 1/4, right? This goes back here. So first of all, notice we opened into the yellow zone. This is the first touch. This is the second test of the yellow zone. Primary focus is on the first touch of each zone. The green zone is weaker than the yellow or the white. No trade there, right? But then we notice something's odd, right? Like, first of all, when we break the first hour high, look how hard the market had a time of extending. The NASDAQ couldn't extend above its first hour high at all, right? It ripped, but then it got stuck and never broke the first hour high. When we don't break the first hour high, simple rule, middle of the range is very dangerous. Don't take the 50-60 back, right? And understand in the NASDAQ, that's a really hard decision to make. And let me tell you why, okay? It's ripping, right? If this is all you see in the NASDAQ right here, your assumption has to be the first pullback, right? Think about it. It's easy to see afterwards that it didn't work, but you got to be thinking first pullback. Of course, that's, that 50 retrace, everyone's going to be on it. We're breaking to a new high. And then lo and behold, look, you get ripped right through. So you had to know, no break of IB high, barely an impulse move above the first hour high in ES. We got, I think it was 2 ticks above. Certainly I would not call it an impulse move up. So immediately, not looking for a backside test. Now, realize why this is important, guys. If I take this backside test back into the mid, here's stop 1. If I don't realize that this zone is weaker than the yellow and certainly than the white, which is the primary objective, right, then I know I'm going to end up losing money here, right? And then, of course, by the time I get to 24.10, this market is in a full meltdown, right? You got to realize it looked like this bar ended up looking like a beautiful hammer, but what it looked like going into the zone was like this right here. You had 4 really nasty bars, and the bars were getting bigger as they were going down. Instead of momentum contracting, it was expanding, right? So the news turned out to be about something about Donald Trump Jr., and I don't get into the whole politics of reading. As soon as I saw there was a political issue going on there, I said, hey, I'm just not trading until I figure out what's going on. And then when it was a political issue, my response was, hey, it's usually BS, but now I don't have trade location. Now, there's one piece here that's really critical. What do most struggling traders do who are trying to make money? When they miss the low, right, everyone figures, oh, it's got to come back and retest the low, or we get a 50-60 back or something like that, right? So notice, remember this green zone here is weak. So the first thing I say is, I'm not shorting in the hole. We've already had a rotation down from 25 to 10. 15 points of rotation. That's the average rotation in the day. So, and Don Miller does a great job of describing this, but the emotion that you get caught up in when you see the speed of the market and you're trying to respond to that speed of the market, right? So what do we do to clarify? Well, a couple of things. First of all, don't short in the hole. This market hasn't had a 5% correction in forever. We can barely get down 1%. Once we're already down, realize responsive buyers are going to come back in. Secondly, discipline. The there was 2 locations you could take a trade from today that had high odds. 3. 24 to 22, that's the second highest odds locations we had. The white zone, the highest odd location. And then the next location was 2410, right, to 2408, roughly. That was the next highest odds locations for trades, right? So look at what that does over here, right? That keeps me out. That keeps me out from shorting this location back when we come back to 2415. Why is that valuable? Because it ran all the way to 2420. This would have been another stop. So realize at this point, 1, 2, 3 stops are avoided, right? No over trading, no trading in the hole. So, you know, you always want to get on and be promotional and say, hey, I caught every trade and I'm making millions of dollars, and come join the room. We're doing well. We do well almost every day, but part of that doing well is being able to hold on to your capital, right? So 1, 2, 3 losses avoided so far on the NASDAQ, right? If you look, we rotate back into the white zone. Now, here's the irony of the white zone. See this rejection that we get out of the white zone right here? This is a beautiful trade. 56.95 all the way back down to 56.80. This is what I anticipated this morning. It did not happen in the morning. It happened in the afternoon. Guess what? I'm not taking the white zone again. Look how many times it's been busted through once. It's been busted through twice. This again goes back to being something that's really important. I put a lot of work into figuring out where those white zones belong, right? It's hard to let go of something you work so hard that's failed. You want it to work, right? And that agitation can even build when you see, well, the first time it didn't work. We knew not to take it the second time for the same reason we didn't take the S&P. These markets weren't matching, right? And then you see it work the third time, and you're like, you know, really? Come on. But the discipline trumps the desire to trade, right? And then lastly, look what happens. We break. Again, remember, NASDAQ was strong. We break, and look, it pushes all the way up and closes at a high of the day, right? So I have 1 or 2 ways of looking at this day, and S&P did the same thing, right? And what this bar here is this is collecting all these shorts in here. Everyone, so the reason we're getting rejection here, right? Think about what the other team's doing. We're getting rejection here, guys, because people are thinking that we're going to come back and retest the low, right? That's what that can be the only reason why you're selling in here, right? Why else would you sell here unless you think we're going to come back and test the low? Notice that as soon as we get behind these guys, everyone has to cover, and then we push, build up some more shorts. Everyone has to cover again, right? And then we finally exhaust. Where do we exhaust to? Look at that. This is the front of the white zone, and then we roll down 4 points. Notice that the NASDAQ was much stronger than the ES. It actually closed at the high of the day. ES actually rotated down out of the white zone for 4 points, right? To come back and backside test the opening print finally, right? It gets an extension, and this is also a great contrast. Once we get the extension above the opening print, finally the stretch back in provides the trade location. The last piece is, and the reason why I have the white zones there is, this is a lot of thinking, right? It takes a lot of work to keep your mind clear as to what the market is doing. It's a real challenge, right? The white zone's there to clarify, but 2 things about it, right? If when you take a stop, I assume that I will not get stopped out of the white zone, right? If I do get stopped, I stop trading that particular instrument, right? Why? Because the whole objective is so that I don't bury myself. I know the majority of the time the white zone works just like this right here. Okay, guys? And everyone in the room, I'm talking to all of y'all. This is how the white zone works the majority of the time. Another great example of the white zone working just like that, even in straight up markets, right? If we look at, I don't have it. I'm not going to open it up. But if you look yesterday, we pushed right 24.28 to 29 was our key location. We were rejected right out of that for 5 points yesterday. So again, focusing on the white zone gets you your 1 or 2 points. What do you have to deal with? If you're focused on the highest odds trade locations, right, you have to accept that occasionally they're going to break. When they do, it's incumbent on you to stop trading. Don't keep taking trades and burying yourself in there, right? B, note that the NASDAQ's more likely to break than the S&P 500 is because there's greater participation, right? And the same rule goes for CL. CL is more likely to break than ES is. Again, it's a thinner product, and the bond market is more likely to hold and not break than than any of them because it has such thick liquidity and it gets traded right to the tick quite often. So again, what I want to take from today is two things, right? First of all, we did a great job not getting run over. We did a great job recognizing that something was off about the markets. We did a great job not shorting in the hole, which would have been very expensive, right? There was multiple stops. That today was filled with landmines. What you're going to see on Twitter and StockTwits and everywhere else was how great the trade was and how everyone knew, despite the fact that it was news, that there was a news environment, that this was the perfect low. Well, I could come out and say, well, hey, I knew that was the perfect low too. But the fact of the matter is, I didn't take the trade, right? I'm not going to buy into a falling semi-truck and try to catch it, right? I just don't believe in getting run over. This was great trade location. The most ideal trade location would have been back here at 2408. It didn't hit. It was already on too big a stretch. And then I didn't get run over on the short side either. So for me, I just have to chalk it up to frustration, process that frustration, accept that I am powerless over what the market does, but I am totally in control over following my process over and over and over again. And if you do that over the long run, and even intermediate run, right, you will get paid, right? Your down days should be small. Your up days should be relatively large. If they're not, something's going wrong and you got to get it fixed. Anyways, my name is Simon. I'm a Trade and Perform coach, and I hope everyone had a great day. I'm going to post this for both the private and the public, and I hope this helps some of you guys out there. If you'd like to join us in the room, email me at tradeandperform@gmail.com. Here, I'll type it out. And let's take a minute so everyone can see it. I guess that's not going to happen. tradenperform@gmail.com. I'll make that bigger, and you can email me and ask for a free 5-day trial, and I'll be more than happy to extend that to anybody who'd like to come check out the room. It's $95 a month for a professional mentoring room, ES, NQ, ZB, and CL charts. I don't think there's a better deal out there, and I invite anyone to just come and experience what it's like to trade with a professional and a real mentor who can help you go from a boom bust or a losing situation to, if you do the work, consistent winning situation. Anyways, everyone have a great night, and I hope you killed it today. Hope everyone made money. I hope no one got run over. That was a very nasty rip down, and man, I'm just glad I got out of here with my equity intact, and I don't have any money to make up for tomorrow. So have a great night, guys.